Now, there are some secondary influences as well. We talked earlier about how bonds affected the Hungarian marketplace. People were buying Hungarian bonds because the interest rates were high, and it was driving the forint into a stronger place. Well, it's the same thing with the U.S. dollar. As people buy and sell treasury bonds and treasury notes, these items affect how the dollar is moving. And this works both in the cash marketplace and the futures marketplace. So definitely watch these markets when you're trading foreign exchange. And then we talk about short-term euro-dollar deposits. Short-term euro-dollar deposits have an effect on how the dollar moves. Euro dollars are simply dollars sitting in foreign banks, as we spoke about before. So since these dollars are sitting in foreign banks, how they're lent out, what rates they're being lent out at, directly impacts what's going on with the U.S. dollar here in America. So definitely watch this market. If not possible, trade this market as well. It's a great counterbalance to what's going on in the currency markets. And then lastly, general economic data that comes out from the government. Watch for gross domestic product, watch for gross national product, watch for job reports. And each one of these reports is an opportunity for you to trade, and that'd be caught on a treadmill trying to attempt to find a trade in a 24-hour marketplace. You have the same type of things going on in other countries. The central banks play a key role, and actually the primary role right now in a couple of countries. The European Central Bank is playing a tremendous factor in the development of the European Union, especially as every year they keep adding more and more countries to join. So whenever you want to trade the euro currency or the Swiss franc, definitely look towards the European Central Bank website to find out what requirements they have, what policies they're promoting in order to improve your knowledge of what's happening between the euro currency and the dollar, or the euro currency in some of these emerging markets we discussed earlier. Same thing with Bank of Japan. The Bank of Japan is the central bank of Japan, and Japan has been in a very long-term recession. They have been unable to move from where they're at. The Nikkei 225 is finally making some movement, but overall the economy is fairly stagnant, and they are looking to be overdwarfed by the aggressive nature of the Chinese government. So look at the Japanese central bank for information about what's going on in Japan, how to trade the Japanese yen versus the dollar. And as always, it's fundamental information, but it's all there for you to read, and it's all free. Then there are some secondary market influences. Around the world, every single country has a central bank. They have to in order to work with the International Monetary Fund. And so here's a website in order to find out the central banks of every single country. So if you're interested in Hungary or trading Hungarian forints, you can definitely go to this website and find the Hungarian Central Bank's website, which can be I think has an English version as well as a Hungarian version. You can go to Romania, you can go to South Africa, and it's just a great idea source for you to come up with trading strategies and currencies that people may not be looking at, but have a large opportunity for huge jumps. There's a report, an Eastern Europe report, talking about the various countries and their level of stability and being entered into the European Union, found at the following address, which is ccme.cz. Great resource for you. Just put out by Commerce Bank. A lot of information, and again, just an idea source. Then lastly, there's emerging market reports that talks about the various crises, financial crises and bank crises around the world, which unfortunately is good for speculators in currencies. We're looking for the countries that are operating at a weakness comparative to another country's currency and looking to exploit that difference. So definitely look at the nber.org site in order to learn what countries are having problems. Here are some basic tips to trading the cash Forex market. As I said before, the Forex market really is not too different from the futures market. And since there are exchange-traded futures on many of the OTC cash Forex markets, you can get a clear picture through looking up commitment of traders reports, using relative strength indices, using Bollinger Bands to get an idea of what's happening in the futures market to get a better idea of what's going on in the OTC market. Now, when you're trading the 24-hour OTC market, really concentrate your behavior on finding out what, or getting a calendar, and we have a calendar that we provide if you contact us, on what major announcements occur throughout the year. Those major announcements, if you focus on only trading those days or around those days, will greatly increase your opportunity to be successful at trading Forex. Trying to trade Forex on a day-to-day basis, 24 hours a day, is a near impossibility. Also, trade in small increments. In the OTC market, since you realize that you only have maybe a day or two to trade, and you also have the potential of paying interest rates, many people simply just don't trade the OTC market for long periods of time, no matter how much it can trend. And so they focus on trading in 60-minute charts while getting their ideas and indicators for entry and exits on 15-minute charts. So use that as kind of a general idea of how you're going to enter and exit the markets on 60-minute and 15-minute intervals. It's a great way to trade this market, and you'll be able to see a lot of opportunities, especially when you catch on to a trend. Use the dollar index as a guide. That's the third strong tip I can give you. Since the dollar index is a conglomeration of multiple currencies, it can kind of give you an idea of what people and what banks think about what's happening with the dollar. You'll see that it give you the strengths and weaknesses and ideas where your cash position will go, and it also gives you some ideas as far as who's trading, the number of commercial investors, the number of speculative investors when you go to the commitment of traders report. And it also shows you how accumulation and distribution is working for or against the dollar. It's a great indicator to keep up on the screen if you're watching or if you're trading Forex. And then the last is the futures counterparts to many of the hard currencies, which trade about 80% of the time, are definitely capable ways of providing crucial information. Now, we spoke about this before in the last seminar, that the forward month, or the first month in a futures lineage, is typically considered the spot or cash month. Always look to that month when you're trading Forex over the counter. It's that month that will give you an idea of how the market is doing, where the market is heading, and how you should be trading the Forex market at all. And if you should be trading at all, if it's moving sideways in the futures market in the forward month, or the first month, then it's most likely that that market's not something you'd like to be in. Also, you can use this to estimate the amount of volume and open interest that is happening. It just gives you a clear picture of what's going on in the market. And more importantly, it allows you to see who's trading what through the commitments of traders report. And lastly, you can use the general technical indicators that you would use in the futures exchange exchange-traded market on the Forex. You can get an idea of whether there's divergence or convergence between these two and how you should be trading it. Now, we'll begin with tips to trading futures Forex. Now, as I said before, there are a lot of exciting things that you can do combining futures and Forex trading together. And we covered a lot of this in Speculating with trading futures and traditional commodities. And I'm just going to cover them briefly and then give you some more ideas and examples of what you can do while doing this. Now, what's unique about Forex trading for average speculators like yourself and I is that we have the ability to become hedgers. There is a cash market that we can participate in, and there is an exchange market that we can participate in. In most traditional commodities, it's almost impossible to find that. You can't do it in live cattle. You can't really do it in coffee. And so, since these two markets work and run simultaneously, and small speculators like you and myself can trade them, why not take advantage of how these things trade?